Well, how are you?
I am very, very well, Alexander. Yourself?
I'm doing very well. Today we're here with Dan Fonseca. Y no Jay Fonseca, el de la televisión, no. Dan Fonseca, the American Pacific Mortgage. And we are here to chat a little about the differences between a mortgage company, a bank company, the traditional banking, and everything that relates to that because it's been confusing, I guess, since 2007, right?
Yeah. hmm
So that is one of the reasons why I invite you, or Connecting and Cafe invite you. So you can give us a little of what is those difference. However, just tell me a little about you.
I've been in the industry now for about 7 years. I'm with a good company, American Pacific Mortgage. It's awesome. It's like a team. Like when we work on loans, working together. Got two kids, older. Got a lot of free time now, which is nice. But that being said, I just end of the day, like I came from collections, which is being people on the phones. Well, not myself, but a team
Mm-hmm.
underneath of me that would be making phone calls to, for past due credit collections accounts or charged off to now helping people get into a home or guiding them to what they need to do to be able to get into a home, which is night and day. So I really enjoy what I do. I enjoy helping people get into a home.
Mm-hmm.
I enjoy the excitement when they get their keys for the first time. And that's what really, really drives me and wants me to help people. But most importantly, being that I'm bilingual, I want to help Hispanics get into home as well because I think there's a lot of disconnect when it comes to communication,
Mm-hmm.
to where maybe the Hispanic clients may not know or understand if they don't have someone that's speaking the language is what they need to do, and that's where I really want to hone in on.
Yeah, and that's what that's the main purpose of Connecting and Cafe. Not only is to get out there to the people that are in the house and the podcasting world now. We also want to educate,
Mm-hmm.
as we want. It's one of our main goals. So I'm happy that you're here,
Thank you for
and
inviting
I
me.
and I know you're here located in Cleveland, Ohio, but you guys, American Pacific Mortgage, provide services in other states.
Yeah, we're originally out from California.
Oh,
So
okay,
we're big time
all
out
the
in the
way
west.
down.
Yeah, all the way in the West Coast. So we're big time over that way. Um, so we offer several different offer a lot of different programs. Non QM, which is non qualified mortgages. For instance, maybe like self employed people, 1099
Yeah,
employee
sometimes
people,
have challenges.
big time challenges that normal banks may not even look at
Mm-hmm.
for the simple fact that that's not what they're geared to. Banks are more geared towards your conventionals, your FHA, where us, we can do jumbo loans, we can do USDA loans, we can do, again, several different loan programs that typical banks don't offer. We do. And that's kind of the difference between a traditional bank and lender, a mortgage lender.
Yeah, let's go into those details. I know in 2007 we have the United States crash, and that was due to a lot of factors, but one of them, and the most important one, is that a lot of mortgage company, and including banks as well, were doing loans that were not as good as they might look like. So people face, they were getting these houses with these monthly compromises, and in a few years, when the market crashed, those loans were not worth it what the people own,
Mm-hmm.
correct?
Mm-hmm.
And that is linked now to housing counseling and all that. Um, what happened? Tell me a little of what happened at that point that led to the people to understand that doing mortgages with brokers, with mortgage company, is not as safe as to do it with the traditional banking.
Well, honestly, everybody's getting greedy.
Mm-hmm.
End of the day, there was people that couldn't afford a home that were being put into a home, and that's when the government took over and put stricter guidelines on the mortgage industry and so on and so forth. I wasn't even in industry at that point in time, but obviously I didn't have a little bit of knowledge on it. But that's typically what happened was that people, were the homes were being appraised for a lot higher than what they were.
Right.
Maybe they're put in a variable rates where they didn't understand
Mm-hmm.
that, and then all of a sudden their mortgage jumps up, say $1,200 to now $1,500. Now they're in a bind because they can't afford it. Home going into foreclosures, and that's really what happened.
Yeah, and I hear a lot of people that actually um, saying that they were doing mortgages without income verification,
Yeah,
which is crazy.
crazy. Yeah.
But yes, I know that led, and I don't want to make you feel that it's only with mortgages, because I know it's a lot of regular bank, traditional banking that got involved into that scheme as well. Um, but tell me a little, what is the difference? I think this is like the basic question. What is the main difference of getting, besides that you have a different products, between getting a loan with a mortgage company and getting a loan with a traditional banking place? What is the difference?
So the main difference, honestly, is that banks are with the stricter guidelines.
Mm-hmm.
So they may not be willing to work with less creditworthy people, or maybe take a chance on maybe self-employed individuals, this and that. Whereas to a mortgage company, they're more apt to work with those type of clients, work with less worthy client borrowers, and also like the self-employed individuals, the 1099 employed individuals, where the traditional banking industry won't really touch them because they really
Mm-hmm.
don't know what to do. More or less, a bank is, they have, like I said, their FHAs, conventionals, but they don't go into the jumbo loans, the non-QM
What
loans.
is a jumbo loan?
Jumbo loan is, for instance, like a $1.2 million home where you have offered two different loans in one. Banks don't want to touch that type of stuff because they don't really know how to do it. Not to mention, when it comes to a traditional bank, um, they don't really care about your closing date. You know what I mean? Because they're not geared towards mortgages. They're more into you putting money into opening up one of their accounts, and then more or less using that to get more banks, because that's how they make their money, is by buying banks, not necessarily mortgages. That's not their scheme. That's not what they want to hone in on. Whereas to where a mortgage lender, that's our job.
Right.
That's our bread and butter. That's where we work with other less than worthy clients, and that's
Mm-hmm.
what we do. And also, ideally, with a mortgage lender, you're typically working with that person from the beginning all the way to the end.
Right. So let me see. We can say that then the mortgage lender is like a group, like a corporation that put money
To the
together,
investors.
is a group of investors that lend people to money based on different criteria that the bank
Don't
does
do.
don't do.
Right.
Okay, they go out of a little out of the traditional lending process. We can say that.
Yes.
Oh, okay. That is important to know, because I think there is I will say people tend to think that because the mortgage companies are easier for people to borrow, which I think is not true either, because you take into consideration credit as well. You take into considerations 1099 or employment, length of time. Is that important for you guys?
Well, most traditional banks won't go as low. Like, for instance, mortgage lenders may go as low as 580 credit score. Typical bank won't even touch something like that. Okay. Also, when it comes to self-employed individuals, there's different programs that typical banks don't have, where we can, it's a 2 year, self-employment history, tax returns, or we have, another program we can do maybe 1 year. We have bank statement loans, where we don't even look at the income, we look at the money coming into the bank statements and kind of go off of that. So there's other programs that we offer that traditional banks do not.
Okay, so it's more flexible, I
100%.
will say. And when we're talking about during our housing counseling process, we want to make sure that the people access the right loan for them, because the idea of housing counseling is basically that, not only for the individual to purchase the property, is how to maintain that property, and in a long term how to probably invest in another property. So we want to make sure that we're referring people to the right lender, but at the same time we don't want to hold the opportunity to someone to buy a house because maybe that person have a mark in their credit.
Mm-hmm.
So I think that is one of our in housing counseling, that is one of our I won't say I will say lo puedo decir en español porque a veces se me traba el inglés.
Mm-hmm.
Es una de nuestras inquietudes, that when we referring someone, we referring that person to the right place.
Mm-hmm.
And I always have that thing that why we're not including in our, because HUD allows mortgage to be part of our referral process. I mean, it's not a problem for us to do that. But for some reason, a lot of housing agencies feels that we need to be only in the regular bank industry. So that's what I'm happy that you are here and you're happy, and I'm happy to work with you. You have helped some of our clients, and I will continue referring them to APM when it's needed, because I think it's an option. Mm-hmm. And I do believe that we have clients out there that can benefit from you guys.
100%. It's a very viable option. I know you mentioned, Alexandria, about credit. One thing that maybe banks don't do is work, or maybe they'll shoot someone down or stop them from moving forward because of credit. Whereas to us, like, we work with the individuals. Maybe you're not able to buy a home right now, but maybe in 3 to 6 months you are, and we'll work with you to do what you need to do to get your score up to where we need you to qualify. So that's the difference between banks and in a lender, where not all lenders do that though, because it does cost money to review scores and help them get
up. Yes,
of course. Free, but we do that because we know you'll be a future client, and if we help you get your score up, you'll be back. You're not going anywhere. Now that you may refer us to somebody else, one of your family members, friends, co-workers, who it may be, because we showed what we do and we treated you the right way.
Yeah. And let me ask you something, that the loan process goes to underwriting, like in a regular bank, that you guys take all the paperwork, collect all the data from the client, and then goes to an underwriter. And it follows the same
we're no
order.
Different. We're no different when it comes to we got to follow the guidelines set forth by the CFPB and FDIC. So all banks and lending institutions have guidelines we got to follow. It's all the same. However, we may close loans quicker and faster because we have less overlays. Every lending institution is different when it comes to overlays that they may have.
What is overlays? For those people that are there.
Overlays, for instance, may be like a guideline where, like, a bank may have something where they may halt a loan from moving forward, slow it down, so on and so forth. We, on the other hand, we only do banks. We only do mortgages. We're not doing checking and savings, not holding anything. The banks are more towards, again, you put money in their banks, as opposed to where we are. This is our bread and butter. This is how we get paid. We want to make loans push through and get them closed as quickly, as easy, and fast as possible without any issues. As opposed to a bank, really don't. It's not really their forte. It's not really their honed in on. So when it closes, it closes. Us, we have closing dates. We want to hit them, or before.
And ideally, after we complete the housing counseling process, the client should be ready when he goes shopping for a loan. So
be approved, be pre-approved.
Exactly, because that client should have worked with their credit. That's the idea of housing counseling. I don't want to hold a client here and send it out there to get a pre-qualification when it has a lot of things in their credit or might not be ready for a loan, period. And that's what we are able to identify prior to refer them to a mortgage company or a bank. So that might help in the process.
One thing that we do too, Alexandria, is here at American Pacific Mortgage, anybody can get you a pre-approval letter, which is you just call me up when you tell me what your make a month, and this is not really not collecting the income documents. So one thing that we hone in on to eliminate any issues and hiccups and barriers that may pop up, because anything can happen with the loan process at any given time. We do what's called a loan commitment. So we get all the income documents, your paycheck stubs, your bank statements, and we send it to the underwriter for a loan commitment. So before I issue a pre-approval letter, your file has already been underwritten by an underwriter, which holds much bearing out there with a realtor when they're submitting an offer, because we know
They have an idea of how
we
much
know exactly what you're
what
approved
they can
for, and
afford.
yeah, you're not gonna have any issues. Or if there are any issues, like I said, there's a lot of things can happen in any
Loan process.
loan. So we eliminate that up front because we already know what may potentially happen or what we need to do to make it happen prior to, and as opposed to just having a pre-approval. Now you submit an offer. Now you have all the hiccups coming up because you didn't collect the income documents. That's the difference between a loan commitment and a regular pre-approval.
I see. That is interesting and good to know. You were talking that you guys work with FHA, which traditional banking does, conventional, jumbo, and you mentioned another two ones that I don't know.
It was USDA, and then
oh, USDA for farmers
Yeah,
and that
yeah.
kind of.
yeah,
And that also includes certain areas, correct?
well, yeah. You gotta be so like for instance for USDA loan you gotta make X amount of dollars. You can't go over the median or whatever.
The
AMI.
AMI.
Yeah, wherever you're living in. So, and again, that USDA loan takes into consideration all people living in a household. So whoever's living in there and making money, it takes in consideration everybody.
Do we do a lot of loans, USDA loans here?
I have done a few.
Oh, really?
But not too many here. I mean, I'm licensed in other states as well, other than Ohio. So, not necessarily in Ohio have I done any USDA loans.
So would you go, like, let's use for example Cleveland, a USDA loan might be no?
Rural. Like it's gotta be rural.
It has to be all the way where the
Like,
Amish are.
Yeah, like yeah, it's got animals. You know what I mean? Like yeah, very rural.
Because it's agriculture
Mhm.
is the one who's regulating that.
You got it.
And what else? Veterans?
Oh, VA loans, 100%. Those are easy loans. That's a shame because a lot of banks don't do VA loans.
I know.
That's a mark for the veteran. You know, I mean, they put their life on the line for us, and they want to get a loan, and banks won't offer them a loan because for whatever reason, they don't want to touch them. A VA loan is a very good loan. It's a very easy loan to do. No closing costs, nothing. You know what I mean, for the vets. So it's a beautiful loan for these guys to take advantage of. And also like the non-QM loans, meaning like the bank statement loans, where I was going to consider talking before, your self-employed individuals where banks won't touch. I mean, we got a lot of different programs that banks don't even consider that we do because that's what our nature of the business is.
I always have a challenge, and I'm going to ask you this. With some of our clients that have been working full-time, some of them do side jobs. You know, that lately a lot of families have to work more than one job to actually, live better, I would say. So they have a lot of challenges when it comes to prove that side job of that part-time job or that extra hours. A lot of banks don't take that income into consideration. What is that?
Well, we could take that into consideration as long as you've been doing it for 2 years continuously. So, for instance, if you just started a part-time job 3, 4, 5 months, we can't use that income because it has to be a minimum of 2 years that you're working that part-time job.
Oh, okay. So for those people that are doing, for give you an example, Uber, Lyft, and one of those that is common now, especially young people, you will not take that into consideration at all if the person haven't done it for at least 2 years.
2 years.
Oh, okay.
And filing on their taxes.
Right. Which I think is one of the requirements that they...
A lot of times they don't.
Okay. Let me ask you this, and I might know the answer, but I want to hear it from you. do loans for people that are not American citizens?
I-10 loans. We do. I do them all
Okay.
the time.
Okay. That is important for our clients.
100%. That's one thing and like a lot of those I-10 loans, they only speak Spanish.
Mm-hmm.
So that's where I come into play and I try to help these guys out. 100%. We do link loans.
How is it called?
Link loans?
Link loans.
Mhm.
Okay, that's good to know. Well, I am so happy to have you here. I learned a little about mortgages. Something else that you want to share with us?
No, I mean anything you want. I'm happy to come on here to the Connecting and Cafe at any point in time. And
By the way, you didn't bring coffee today.
no, you know what? I got my water.
I have water too.
I had 1 cup of coffee this morning before I came, and I was like, I don't want to be too wired up. So
Yeah, and we want to do something different today. We didn't bring coffee either. I think I have coffee at home, coffee here. So I was like, oh, I'm over caffeine today.
right.
But I'm so happy to have you, and I'm gonna set up something for us to meet again. Thank you for so much for everything you have done for our clients, and I hope we can work together still.
100%. I appreciate you offering me the opportunity to come here again, and anyone you want to refer to me, I'll be gladly to see if I can help them out.
So aquí con Dan Fonseca, que no es Jay Fonseca, es Dan Fonseca, pero está aquí con nosotros, dando dos boricuas, ayudando a nuestra gente. Conecten en café. Nos vemos.
Bye, ciao.